Welcome back to the channel, guys, your home of hopium-free crypto and economic market cycles updates. In today's video, we're going to look at where the smart money, potentially dumb money, will dump their Bitcoin over the coming quarter. So with that in mind and the dump also on your mind, smash up the like button if you're sitting on the toilet watching this video, taking a dump. Let's see how many of you are actually watching these videos on the toilets. Otherwise, if you feel like hitting that like button, do that as well. But the only thing you can't not do is hit that subscribe button and the bell notification icon so you don't miss any of these updates. Thank you very much for following. I've appreciated all of your comments over the last few videos. It has been an absolute blast. And a quick shill at the beginning so we can get over and done with. The Bybit shill down below, $4,450 of sign-up bonuses. A great exchange to use if you want to protect your privacy. There is no KYC on Bybit. So check that out, top of the video description, and I will be using our fantastic TIA GAN swing indicator. That's this yellow line here, and I'll show you how to use it in this video and how I'm using this to basically forecast these dump periods. All right, it's a really easy calculator tool, so that's also in the top of the video description. All right, you know the deal. Let's crack on with the video. We're looking at the area because we have just had a close on the monthly chart, so basically going back to the macro time frame here. As we lead into my own forecast of a further low, potentially coming in 2022. So we're looking for another significant low. I don't think this is the end and we just boom here to new all-time highs from this low of 17.5K, but it does look like we're at least in a zone, and a zone can span from now, which was June, we're in now August 1st. It could span for a number of months, maybe 6 months, 7 months, 8 months, okay? So that's what I'm looking at in terms of this low period. But within that low period, we will have areas where the market wants to come up and test some higher prices before dumping again. And that's what we're specifically looking at in today's video. So we're going back to the macro time frame here and just giving the short-term stuff a little bit of a break for this video. So long-term, we're gonna look at timing. How long will that take? When is that going to happen? Prices as well, and basically once you've got the time and the price, you can call it a Nostradamus prediction. All right, so timing wise, let's go back and use this GAN tool here, the settings, and scroll down to bar count, click on that, and that turns on our bar count. Basically, if you're using candles, it's a candle count. Using bars, it's a bar count. Same deal, all right? Just measures the month or the time frame that you're on. So monthly, we're looking for how many months up could this move last, and then we're looking for some sort of rejection points in terms of price, and then the calculations of how we get there. So I'm specifically looking at the bear markets for this tool. The bull markets are going to have longer periods of the market trending up, meaning more months that it's going to trend up before it puts in a turn and then corrects. Same deal is going to happen for the bear market. You should have more bars to the downside than you do to the upside before it basically rallies. So a rally is the correction in a bear market. You know, in a bull market, the market runs up and then it corrects before it continues on. Now we're in rally zone. We've only seen one macro rally so far in this bear market. And previous bear markets have seen 1, 2, at least 2 in this case, before it hit that final low. But if you wanted to call this section in 2019 another mini bull and bear market within the overall bull market, well then you had another rally here and here, so that adds 2 more. So there's about 4 in that in total, with 1, 2, 3, 4, and 5 dumps before the market took off. Sure, things can be different, but I tend to not think that it's going to be different considering things have happened quite similarly throughout history. That's charts, that's human psychology, that's economics, that's everything. Everyone continues to do the same thing over and over again because they believe this time is different. And you're hearing it in the news now. You know, if we can tie in some of the news to this, it's the same thing that happens time and time again. You know, this time has to be different. We've got inflation that wasn't around here last time this thing happened, meaning the GFC in 2008. So we also had 2008. I've got, this is the S&P 500. You know, there was the 2008 dump there and away things go. We're potentially in a recession. People are sort of betting on this, thinking that things are going to get a lot worse. Remember, we covered this in previous videos, looking at there is a difference between the hard times, the lower end of the socioeconomic scale are feeling and facing. That's all very real. It's very, very different to investors and people who are actually using their money whether it's hedge funds, whether it's other funds, whether it's individuals like you and I are investing. Sure, maybe you won't be able to buy that top quality steak, but at this point, investors versus that other end of class when it comes to investing, we're just looking at investing, okay? So there are these things going on, but I personally don't believe these times are going to be different. So with that little mini rant out of the way, we're looking at Bitcoin here and where this is falling in terms of timeframes, and we're saying that this is still a bear market, and we're just looking at the counts to the upside, okay? So the downside, you can see for this previous, we looked at this bear market here in 2018, 2019, now we're looking at 2014. We had 5 months down, 2 months up, 4 months down, 1 month up, 2 months down, you can see the number here at the bottom, 2 months up, and then we get the overbalance. We got 3 months up, 1 month down. So we looked at this in a video just over the last few days looking at overbalance in price. The same thing happens in time. Really, really important to note, especially on the macro scale, if you're going to get an overbalance, and this swings the power to the opposite investor. So in this case, it was going from bears to bulls, but it took many, many, many months to play out. And then you have the same thing happen here, which was popularized by the Wyckoff pattern. You see the same thing happen here. It starts to shorten out. Look at those time frames up there. 7 months up, 5 months up, 2 months up, and we roll over. And of course, it is quite late, but you're on a macro time frame here. You're on a monthly time frame rather than just a short term. And it happens on all time frames across all markets. It's been tested for over 120 years just looking at this Gann analysis. So we've got the data right here. It's easy to use in this tool here. We just open up the settings. We had the bar count. We open that up. We can see that the rallies tend to take 1, 2, 3 months to the upside. What had happened last time? 3 months, 1 month, without this little mini bull market in the way. That's a 6 month. We also had a 2 month, and then the market moved down. It was trending in terms of a correction here before COVID happened in March. So the market was trending down through the later part of February. So it may have already had a turn in the market. So a couple of months up, 1 month down. But COVID just sped that up and dropped us into the bottom there. Okay, so, and that was the early part of March as well. So keep that in mind as well. I know people say, well, this time's different. We don't have that black swan event. Forget about it. It's just the turns, all right? So if we have that, we have 2 months up. Where does 2 months lead us? Well, it leads us to this month if we get the break above last month's high of $24,000. We're just looking at the top here, $24,675. So we need to get above that. And then we have some resistance levels playing out approximately the high 20s, so 27, 28K. And then we also have the swing low here at about 34K. All right, so that was 33, and our 50% is at 34.5. So we have the high 20s and somewhere around that low to mid 30s as well. There's a big section here at the moment, but it'll become clearer as the months go on because we are looking at a macro time frame. So 2 months up, we've covered where this could lead us. 2 months, and at the longer end of the averages, about 3 months. But if we start to turn into 3 months, we potentially are seeing the end of the bear market. The accumulation can still carry on for a number of months, which means it gives us time, and it's a positive. It's a fantastic thing to see the market start to turn in a macro sense because you know I can keep dollar cost averaging in to something long-term like Bitcoin, and I know that the investors will start to step in the next few months, maybe 6 months, maybe 12 months, and we really start to get a move on like what happened back here. It's about being patient. That's the longer term game here. So we're starting to see that now. The next thing is the dump price. So I covered that just briefly there in terms of the support and resistance levels. We come back to these lows. There's the first one, 28.7. These are significant levels, very, very significant levels because they are monthly turns. We're not looking at the shorter term time frame stuff, and there is going to be many of those as well, but just for the macro stuff. Then underneath these candles, you can see about 34.6, and that also lines up with the previous dump, and that also lines up with one of our 50% levels. Top to bottom there, this is our major 50% all the way down to 0 is at 34.5K. Because if you divide 69, that's going to give us the 34.5K. So this is the highs resistance card. I bring that back down to 0, and you can basically see that this is going to line up with about that 34.5. So that's where we're sitting in terms of the price, and it is clustering very well with the price there. Can it happen this month? It is possible. It's possible, but to go from the swing low to this month and meet that resistance at either this diagonal price or the yellow line, it's going to take us out to approximately 97%. So that's from the low of 17 to that top, and that's within the swing. Has Bitcoin done a 97% before? It sure has in this zone, but it hasn't done it anywhere else. These are all between sort of 30% and about 70%. So we come back to some of these other swings, 68, so call it 70. Here's another swing, about 47. So these are all the times that the market's moved up in a number of months. Moving back, you can see we've gone up a couple of months here. We've got 100%, so another hit. And we have another hit here, 72. So look, it has happened once, and then this big bull market here, which was about 300%. And then once we got to the bottom, the move up was about 80%. So it's not impossible, but I'm not betting on it doing the biggest move it can possibly get, because I don't want to be playing those odds. I'd probably be playing somewhere in the middle at about that sort of 60-ish percent. So the low to approximately 60 or 70% is going to take us out to about $28,000, $29,000. That's just playing it conservatively. That also lines up with the the diagonal, the bear market diagonal here, and that could lead us up into that price resistance too. So that's where that yellow arrow is pointing down. So the diagonals have worked very, very well over the entire bull market. You can see the top to top, then we had the breakout, tops to tops, so we zoom in. You can see the market does respect, or at least use them, so it respects the diagonal. So here it is, down all the way, got the breakout, and then bounced off it. So it hit the two data points here, so we're holding that, there's the diagonal, got rejected, there's the dump, the market dumped again. It's not significant the second time around here, 30%. People will still feel it, it'll feel really bad because it's at lows, but this one here was a lot worse, about 65%, because we went even further down. So any of these are possible, but at least we've got the diagonal here. And it has shown in the past that it has hit the diagonal and then dumped, and we're sort of running towards that target now. So rather than get in too late, we want to avoid buying into the FOMO, which we're unfortunately sort of starting to see again in the market, especially when we look at the crypto fear and greed. We start to see that FOMO come back into the market, and you can see that the fear is just basically left. We're back into the neutral zone, and everyone is feeling like the bears have lost, they're about to get destroyed, and the bulls have taken over, and it's a bull-only game, right? This is like the feeling that's coming out in the market. You're seeing everyone sort of hating on the bears, and it's very sort of amateuresque. When you read about it on Twitter with people posting like, oh, I told you those bears are going to get destroyed, blah, blah, blah. It's like child's play. I mean, what sort of real investor is on Twitter talking about that sort of thing and sort of all getting hyped up about who's right and who's wrong when it comes to bears and bulls? It's quite comical. But this is my third signal that I'm looking for with the dump point. Remember the dump, that's what we're looking for here. Because this is macro, it could be all of August that we have a beautiful pump, but we're just looking out for that dump and not to get caught up in the FOMO. My third point, market sentiment. So we've looked at time. It is possible that we continue up, but we only have maybe 2, maybe 3 months, and we've done 1 month already. It is possible in price. So we've seen the price, it can go up 60, 70, maybe 100%, but it's not as common to see 100%, 60, 70%. So keep that in mind with those resistance levels. Third thing, what the market showed us is market sentiment. So we're using those same sort of periods and not getting swept up into the bull market territory. So we're not looking at these periods when the market just basically goes up, hits, rejects, and comes back down, into June 2020 and goes up again, August 2020 and rejects. We are looking specifically at the bear market period. So these periods where the market's gone down from extreme greed, that was the top of this peak here, and then into the March low. So look at that on the fear and greed. It dropped, and then the market tried to climb out of it. So I'm basically looking at where the market found lows, sort of around the 10, not making this overly complicated at all, just looking at the numbers here. We've been around 10 to 15 for quite a while in terms of this reading. This reading is between 0 and 100, and it started to climb up. So every time this market climbed out of it into September 2019, around 40-ish, smack back down. Around 50, 55-ish, smack back down. Around 55-ish, smack down. And then it climbed a little higher again into the 60s, smacked all the way back down on the COVID news. So if it wasn't COVID, maybe it would have stopped here at around the 40s. But every time it got into that sort of between 40 and 60 reading, it got smacked down. What's happened in the past? Well, this is the bear market of 2018. Remember I said I'm not going to use this mega bull market because we haven't gone on that big rally yet. We haven't had like a few months of accumulation like what happened back here, and then the pump, all right? So that's why I'm using this data. We moved up into the 50s, just touched the 60s, smacked down. Moved up to the 40s, smacked down. Moved up to the 50s, smacked down. You get the deal here. Moved up to the 40s, smacked down. Moved up to the 50s, smacked down. So this is the market sentiment. So we've got time, price, and now we're looking at what people are actually thinking and feeling, more so feeling rather than thinking, the smackdown, okay? So we've seen it again just recently. The market got up into the 50s, smacked down. The market got up into the 50s, smack down. Where are we at? Well, we're in the 40s right now. We just got to 42 over the weekend. Maybe we see a smackdown here. Maybe we go on for another few more days. But looking at the macro picture, I dare say that these things will basically time together. We'll start to see the timing of the bars of the price moving up. We'll see the timing of the actual day counts, the month counts in this case, moving up. And then we'll also get that feeling of, everything is okay again. And that's when the market loves to take a dump on new investors, or calling it the dumb money, the technical terms there. That's when they will dump on the new investors. So you now are completely ready to go, knowing what is coming in the next 1 to 3 months ahead of us in terms of time, in terms of price, in terms of what is going on in the news out there. The same old thing dressed up as something different. The old saying of whatever it is, pig and lipstick or whatever that is. Let me know in the comments down below what your thoughts are in this market right now. That is what I am playing at the moment. I think we'll have a test coming up after that dump. Remember, this is macro play. This is not just tomorrow I'm right, tomorrow you're wrong, that sort of thing. This is the macro play. So like, subscribe if you haven't already. Stick around for the rest of the journey. Got some good stuff for Ethereum coming up as well. Think about what we just talked about in today's video and apply that to Ethereum, because again, the big talking heads out on Twitter and crypto, YouTube are talking about this merge. Remember what happened just in March and April of this year? The market ran up, the merge for Ethereum. Guess what? They got freaking destroyed again. It would have been beautiful to sell Ethereum at 3,500. You remember back to that price point, ETH was around 3.5K there at the peak, and it dumped all the way down to $800. Don't let the news headlines screw up your judgment. You're better than that, and I'll hope to see you here at the next video. Thanks again, guys. Till then, peace out.